Welcome back to CoinBlaw, your ultimate source for global crypto insights. We are witnessing a massive turning point in the traditional financial system. While Ripple and XRP have been breaking down the walls of cross-border payments, today we're focusing on XDC. It's moving the $30 trillion global trade finance market onto the blockchain. Today, we're diving deep into the $2.5 trillion trade finance gap highlighted by the Asian Development Bank and exactly how the XDC network is actively solving it. We'll also unpack why financial giants like BlackRock, SBI Holdings, and even the Singaporean government are pouring serious capital and infrastructure into this specific network right now. Let's start with the language of money. As of November 2025, the coexistence period for SWIFT's legacy messaging system officially ended. The financial world finally speaks one unified language. That language is the ISO 20022 standard. The big takeaway here is that XRP, Stellar Lumens, and XDC were built from the ground up to support this standard natively. Because they speak this language fluently, they don't need any clunky translation software to talk to the legacy banking systems. They are plugged straight into the core of global finance. This native integration is absolutely revolutionary for trade finance. Think of a smart contract as an automated, heavily guarded vault managed by an incorruptible digital notary. In the old days, a human had to manually verify a mountain of paperwork just to open that vault. It was slow, prone to errors, and highly inefficient for everyone involved. But today, the moment standardized ISO 20022 shipping and inspection data hits the system from customs or ports, the smart contract reads it instantly and releases the funds automatically. Our physical supply chains run around the clock, 24/7. Yet our financial supply chains are still stuck in the 1990s, moving at the painfully slow speed of dial-up internet. We still rely on stacks of physical paper crossing borders, which means settling a simple trade can take weeks. This severely bottlenecks the entire global economic machine. According to the latest 2026 data from the Asian Development Bank, these massive inefficiencies and high banking hurdles have created a staggering $2.5 trillion trade finance gap worldwide. That's $2.5 trillion worth of small and medium-sized businesses literally giving up on global trade because they simply can't secure the necessary funding or navigate the endless red tape. XDC is stepping right into that massive void. By leveraging tokenization and smart contracts, it's drastically lowering the barriers to entry and making trade finance accessible to everyone. Looking under the hood, XDC is 100% compatible with the Ethereum virtual machine, but it's been completely redesigned and optimized specifically for the unique demands of global trade. If Ethereum is a crowded, everyday public transit system where anyone can hop on, XDC is more like a dedicated high-speed rail line built exclusively for major global corporations. On regular public chains, a sudden spike in meme coin trading can cause network fees to skyrocket or transactions to stall out entirely. That's a huge risk for big business. Corporate giants settling multi-million-dollar trade invoices simply cannot be exposed to that kind of wild volatility. They need rock-solid reliability, which is exactly what XDC delivers. Utilizing a delegated proof-of-stake consensus algorithm and 108 strictly vetted masternodes, XDC guarantees blazing fast 2-second transaction finality, no waiting around for block confirmations. Furthermore, it locks in an incredibly low flat fee of about a fraction of a penny per transaction. This predictability is exactly what enterprise-level financial operations demand. One of the biggest reasons companies hesitate to adopt blockchain is the fear of exposing trade secrets. XDC elegantly solves this massive privacy concern with a brilliant hybrid architecture. It proves the integrity of the transaction on the public mainnet, but keeps the sensitive granular business data completely isolated on a secure private network. It's the best of both worlds. This heavily enterprise-friendly design is directly triggering massive moves from institutional capital. Just look at Yoshitaka Kitao, the CEO of the Japanese financial titan SBI Holdings. A longtime champion of Ripple, Kitao has aggressively launched a joint venture called SBI XDC Network APAC to dominate the trade finance markets across Japan and the broader Asia-Pacific region. Taking it a step further, the critical Corda bridge is now fully operational. This connects Corda, the private blockchain used by over 200 major banks, directly to the XDC public chain. Banks can now securely lock in trade agreements within the private walls of Corda while using the XDC network to instantly settle the actual value. It's a fully functional hybrid ecosystem. Industry experts confidently predict that SBI is executing a massive two-track strategy, using XRP as the ultimate global remittance network and XDC as the primary settlement layer for real-world trade assets. We also need to pay close attention to the booming real-world asset tokenization market. In February 2025, the UK-regulated institutional exchange Archax made a game-changing move. They successfully tokenized and launched money market funds from top-tier asset managers, including BlackRock, directly onto the XDC network. This brings massive Wall Street liquidity into the ecosystem. Having secure assets like money market funds natively on XDC means corporations can now use these tokenized funds as collateral to settle trade payments while simultaneously generating additional yield. Beyond corporate giants, actual state-level infrastructure adoption is moving at full speed. The Singaporean government, running the world's largest transshipment hub, is pushing the digital frontier. Their Infocom Media Development Authority officially integrated XDC as a core infrastructure pillar for Trade Trust, their highly ambitious digital trade standards framework. Because of this, outdated paper bills of lading are rapidly being replaced by secure electronic bills of lading, massively streamlining customs and international shipping processes. On top of all this, in February 2026, BitGo, a global leader in digital asset custody, officially rolled out institutional-grade custodial services for XDC. This integration comes fully backed by a massive $250 million insurance policy. We are now seeing government-level institutional support combined with Wall Street-grade asset protection.
Let's wrap this up. What we are watching right now is not just another swing in crypto prices. It is a historic, once-in-a-lifetime migration of capital and data. A $30 trillion global trade finance system is physically moving from an outdated analog structure onto a highly efficient, real-time blockchain network. With smart contracts, native ISO 20022 compliance, institutional-grade security, and massive adoption by BlackRock and Singapore, XDC has solidified itself as the core infrastructure of future finance. We will continue to aggressively track exactly how this massive migration of real-world assets accelerates. This is a monumental shift that you absolutely cannot afford to ignore. That is all the analysis CoinBlaw has for you today. If you found these insights into global finance valuable, please hit that subscribe button and turn on notifications. We will be back next time with even more fact-based, clear-cut insights to keep you ahead of the market. Thank you so much for watching, and stay tuned.